Has sprung for soon-to-be homeowners, but is it the right time to buy? Joining us now is Tim Rudd, Collingwood Group CEO, former Fannie Mae executive. Tim, it's good to see you. Thanks for joining us.
Hey, Maria.
Well,
nice
it
to
is
see you.
also a little funny that I'm saying spring has sprung, and behind me we're having a massive storm and snow and wind and rain in New York City. There's a live picture of our cameras outside. But I guess, Tim, a lot of people are saying this season is going to be one of the more interesting ones on record in terms of home sales, even if it does start later than we thought because of the weather.
For sure. Yeah, I was looking at the pending home sales data this weekend, and I thought it was an April Fool's joke. Like, good Lord. So, I mean, we're actually down from a volume perspective than we were at the end of last year, or at this time last year. And there's really three things that I'm looking at in terms of what's going to dictate the spring buying season, what's going to catapult it into the rest of the year. And real estate is a momentum play. But first, you got to look at, there's kind of a catch-22 going on in the marketplace. There's demand is scorching hot. I mean, people have got jobs. They're confident about their prospects. They think rates are going up. They think values are going up. So they're really desperate to take advantage of the opportunity for home ownership. The challenge is you can't buy what's not for sale. And the sellers aren't putting properties on the market because, quite frankly, there's nothing to buy. And it creates this catch-22 where you're at this stalemate, and builders haven't figured out how to make the economic case for building particularly entry-level homes. Then there's the issue of, you've got the whole new tax law. I mean, I look at this kind of like, how quickly and whether or not the industry can actually detox from an addiction that they've had for 100 years, which was the mortgage interest deduction. You know, they've come out with some new policy that looks a lot like methadone to kind of ease the pain from the mortgage interest deduction going away and still entice home ownership. And the third one is really the wild card. You call it the Y factor. I mean, what's going to happen with millennials? You have this largest generation in history. They've got the most education in history. They've also got the most debt, just in terms of student loan debt. And they're underemployed or unemployed. I don't know what's going to happen with them as they try to crack into the home market.
Do you think real estate prices come down this year?
I don't see them coming down. I see the pace of appreciation slowing, which is necessary, particularly when you couple it with rising interest rates.
How about mortgage rates?
I'm more optimistic. I don't see them going through the roof. I mean, right now they're about 4.5%, probably 0.75% higher than they were in September. I'm not as rosy and optimistic about the economy that would require any more than 2 or 3 for rate increases this year.
Yeah, I mean, let's face it, you're still talking about rock bottom rates taken. I mean,
4-year high, though. 30-year fixed rate mortgage is roughly at a 4-year high. And when home prices are so expensive, Tim is essentially describing a scenario in the home market where you reach paralysis, where people who own homes have no incentive to sell them, and then the people who want to buy can't find homes for sale that are reasonably priced, so they just step back. Something has to give. I don't know how long it takes.
Well, one of the challenges, too, as you're seeing, is that while the starter home market has been particularly decimated, one, because the investors, big institutional investors, really created a floor for the housing market in 2012. They bought up millions, 8 million of these starter home properties, and they've even got covenants in their contracts with investors that they can't sell these things and won't sell them for 10 years.
I see.
So you sopped up all of that inventory. And I saw a great article this weekend that described kind of the starter home market for millennials. They said it in 4 words. It's expensive. The properties are beat up. They're small. And they're scarce. That's not real optimistic.
No, it doesn't sound it. Tim, thanks so much for your insights.
Yeah,
Tim Rudd.
So I'm a millennial, and I've got into the real estate market. I was lucky enough where I made my first real estate purchase in 2010. I bought most of my properties from 2010 to 2012, and then I pretty much stopped buying real estate after 2012. I thought the prices were getting crazy, which was kind of a mistake. I did have opportunities to buy in 2013 and 14. I kind of regret not moving forward with it. One of my biggest regrets was actually going to graduate school at USC because that cost me 120 grand, and I probably could have picked up a couple more properties. And I think long term that would have probably been better, and I could have just done an executive MBA or delayed my education. But the biggest issue now is I'm not buying real estate. I did do one deal in Vegas last year, 2017, just with a partner, had a really, really good relationship, so I moved forward with it, but I really haven't touched real estate in a while. And most of the money that I've been saved up, I've been waiting to buy the real estate dip, which hasn't happened and may not happen for another 2, 3 years. I don't know. No one has a crystal ball. But instead, I've been watching cryptocurrency, and I feel like cryptocurrency will be a way better investment than buying a home, especially in this overpriced market. So, what's even more interesting is I don't even live in my primary residence that I bought. I actually rent it for now. Hopefully, the government doesn't find out. But anyways, I rent right now. I have no problem with renting, and yes, owning your home is great, but as a millennial, I do feel like there's much better investments, especially now that they got rid of this mortgage interest deduction too. And right now, obviously, cryptocurrencies has been terrible and is continually going bear. I mean, we are getting closer and closer to that 200 billion mark. So, in my own personal opinion, I am going to continue to buy this dip, and I'm not interested in investing in real estate until we do get a much bigger correction in the market. But let me know what you guys think, and I will talk to you guys soon.